Monday, May 19th, market analysis, Stan Ehrlich. Good morning, 9:48 California time, about the middle of the trading day. Stock market indexes I always start out with, and then futures and a few stocks. We have a very strong recovery from a significant sinking spell Sunday afternoon, Monday morning. We're now back up to almost unchanged after being down something like 7 or 8 points on the E-mini early this morning. So obviously the market's recovered quite a bit from the early break, which made new lows for the last 4 days in some of the indexes, not the E-mini. As you can see, we're lower than Friday, but we didn't get lower than Thursday or Wednesday or even Monday of last week, or anything but, Friday. So looking at this chart, the E-mini, it actually looks like it could pop up again one more time, again. But I am extremely skeptical about the situation. Like I said, on Friday before, it made new highs and closed on a stronger than expected note. But the situation doesn't change just because the market fiddled around a little bit and is around unchanged. We are very overbought. We got up to approximately 85. And if you look at the history of RSI at around 85, you find out the market almost always tops out very soon and probably not much higher, if at all. Now, if we do get higher than Friday's high, we will then have overbought conditions and an outside trading range with a slightly higher quote, because it closed on the high on Friday, and getting above Friday's high means we're only a little bit higher on the day from the close of Friday. And look how easy it would be for it to slip just a little and all of a sudden have a bearish engulfing, higher high, lower low, and a current tick that's lower than the previous close. That would be very, very easy to do if we can just get a little bit above the high of Friday. One tick or more does the trick. Yeah, the way I analyze the market and the signals that I get, and you've seen lots of these. So be very, very careful. We could have an outside down day here easily. We just made a new high for the day a moment ago. Very, very close. Now the SPY is in the same situation. Very high RSI. We add a lower low. We are almost at a higher high, and that would be just barely higher on the day, but it's not quite there, on the verge of having an outside trading range in overbought conditions. And the only thing left is to close below the previous day's close. Now, we've got some bad data here on the SPY. These little spikes on the downside are not legitimate, so just mentally erase it. And we've been climbing, and we're extremely close to the high and the close, right on the last 60 seconds, it looks like, on Friday. So super close. Could happen any minute, the outside trading range. QQQ, very close, very close. Not quite there yet. Same exact story. Plus, remember, all of these indexes have one or more, up to 3 gaps, to close below the market. And the highest gap is still down a fairly sizable amount, and we would be coming out of an overbought condition even if we don't get a higher high than Friday. So I'm looking for a top here. Sorry to say, I got to keep saying the same thing. I know I've said it last week, pretty much all week. And Wednesday, Thursday, well, actually starting on the close of Tuesday, and Wednesday a little higher, Thursday a little higher, Friday a little higher, but a little. I know they've been climbing, but not like before. Not like the Monday and the week before that. We're almost an outside up day, not quite in the QQQ. and there's a bad data bit there on NinjaTrader. So with the data feed, not the software itself, the software only shows you what the data vendor tells it to display, numbers. NASDAQ futures contract, same story. But today's low in the NASDAQ made a new low for the previous 3 days, most of last week. So that's a little bit more damaging, but it didn't stay there. It's all the way back up, almost to a higher high, close to resistance, overbought conditions. I got to continue to say, watch out here. Watch out. About to top out, in my opinion. We did make a higher high in the NASDAQ for the session today, but not from the high of Friday, which is just a hair below Thursday's high. But that really doesn't matter. I just got to get above Friday's high. And it looks like if it does that, it's probably going to also get above Thursday's high, which doesn't change anything, except a higher high for the trend. Next, we do have a higher high in the YM. It did get overbought again today. It was not overbought Wednesday, Thursday, Friday last week, but Monday and Tuesday it was in resistance. Now we're starting to work our way out of the resistance area, but we got this problem of being overbought again. And we're in a very broad area where the market topped out. You remember from October all the way through late February. So it's a wide range of resistance approaching this whole topping out multi-month time frame. And overbought now. All I can say is watch out. Now, the YM session new highs and above Friday's high, and we do have a new high for the trend up. One more peek at the daily chart. It's just that today's low, 337, is not below Friday's low, just barely above it by a squeak. Yep, just barely below it, above it. So we need now on the YM to make a new low for the session to create the outside trading range, because we don't already have the lower low like we did on the other indexes we looked at. Now, what about the Russell? It's got a lower low than Friday, and we're fairly far away from the high of Friday, which was approximately the close also. So this one needs to rally a chunk more in order to have an outside trading range or an engulfing. And we would still be in the resistance area also. So as far as support and resistance is concerned, this is behaving a lot more normally. Overbought, stalling out in resistance, and kind of getting stuck a little in here. So Russell's not quite the same as the others. New high for the moment, but not for the session, and nowhere near higher than Friday's high. Okay, bonds. Interesting. Bonds came down earlier this session to a couple of ticks below the low made on April 9th. Potential double bottom, April 9th to today. The comeback, the rally so far from the low has been quite substantial. And now above the low of Friday. And although it did cancel out the buy signal that we got on Thursday last week in bonds, we did not cancel it in 10-year notes. There's no lower low on 10-year notes. We'll see in a moment. But bonds did make a lower low, so the buy signal wasn't at the lowest low for the move down like it was back on January 14th. And like it was profoundly so on October 23 of 23. So those two bullish engulfing buy signals were whoppers. Too bad this one wasn't. I was hoping it would turn into one. But it is potentially turning into a double bottom. I'd like to see it close above 114.04. If it happens today, which I doubt, we did not get oversold today, but we were oversold within the last few days, and that is good enough. So this will turn green, but it has to go all the way up to 1402 or so, which does not seem likely when we're currently trading at 1220, so 112.20. All right, 10-year notes. Did not make it lower than Thursday's low. Thursday's low is still the lowest low for the move down. It is a green bullish ER buy signal. So far, so good. We're still lower on the day. We've had a nice comeback, but it's not good enough to turn bullish. All I can say is minor support, previous lows have held. I really want to see it close above the high of Friday in order to get something going a little more friendly. What about energies, crude? Well, we're kind of getting stuck here between this support area, top and bottom. Now, the support area bottom didn't hold quite exactly as I thought it might. It dribbled below it a little bit, but we're back inside that yellow trading zone, which at the bottom is support and at the top of it is resistance. Resistance stopped the rally a few weeks ago, April 23rd. Most of the lows, well, a significant number of them, have been around the bottom of the trading range. Maybe I should lower it a little bit. I'm going to leave it the way it is. Nah, I'm going to lower it a little bit. About like that. Not much, but that seems more appropriate. Okay. So we're in this trading range, and it's just getting stuck in here. Period. I'm waiting. We did get a good buy signal lately, May 8th, and it worked great for about 2-3 days. We also got a great buy signal on May 8th with heating oil. It worked great for a few days. Just 1 second here. Let me check something. Yeah, that's good. All right. So we gapped down today in heating oil, out and below a support area. Just went right through it, and we're staying below it. So this is looking a little bit more bearish. You got overbought, turned around, came straight back down. I wouldn't be surprised to see it test the last buy signal low around a little bit below 2.0, which would be my first expectation. And then we'll see if these support levels hold. And I'll drag this over to the right a little bit, updating the graphics. So slightly bearish, but remember, gaps are almost always closed. So rallying back up to the low of Thursday and Friday, which are about the same, would not surprise me at all. I would need it to stop there and turn back to new lows again in order to stay a little bearish for the moment. But nothing big here. I can't come up with anything huge in terms of big moves are concerned. But I can come up with, and I have come up with, over a week ago, this head and shoulder top, which is working so far surprisingly well. I told you that the hot rally high price-wise, May 12th, which was around 3.840, let's say. Well, what the heck? To be exact, yeah, 3.840 exactly, was almost the same as the high back here on January 13th of this year. And that high was 3.870, a little bit higher than 840, 870. Yep. So this is just a hair under. The price levels are so similar, it's ridiculous. Perfect for the shoulders on a head and shoulder top. The timing is also almost perfect. If I were to use a chart example for a textbook on how head and shoulders develop, this would be a very high candidate. We're only, I believe it was 2 days late, to be exactly the same number of days. From the first shoulder high to the highest high is X number of days, and from the highest high to the potential last shoulder high time-wise could be the same number of days because they're very symmetrical formations, and it was only 2 days later. That is very close. Definitely in the ballpark. Absolutely. Price is really accurate. Timing is really accurate. And if I was to draw one of my circles, it would definitely be inside the circle, which I've done before. I don't know why I didn't do it here, but I didn't. Sorry about that. We gapped down a little bit this morning. We're coming close to the neckline, which is about 2.99. And if this works completely, it does produce a downside objective slightly below 1.0. Pretty damn big break considering we're trading at 3.1. I've got to be very bearish as long as this formation continues to work properly in natural gas. Next, gold, silver, platinum, copper, then grains. Now, a little bit lower in the day, doji, inside trading range, not much going on. A little support level kind of held, not very accurately, late last week. And we're kind of between a rock and a hard spot. About the best I can say is there's sort of like a maybe double top, but I don't like it. It's not that close. I wish this high was a little lower or this high was a little higher, one or the other, or both. All I can say is we put a hole in support and we pop back up through that hole, so to speak, and we're now back to a little bit above support. I want to see new low closes. I want to see closes below 31.24, and then we're going to probably get all the way down to 29.84. So I'm slightly bearish, favoring the short side because we do have lower lows and lower highs in the last month and a half. So kind of starting something a little bearish. Silver is very similar, but back into the support area, support and resistance zone. Again, doji, very much like gold. I favor the short side mildly, not super bearish. Get down to the next support level. The last signal we got, a buy signal, was great. It worked out really nice. The previous one before that was the sell, worked out very nice. We're not overbought or oversold, so that doesn't help. Slightly bearish on silver for the moment, but not super high percentage level on my confidence level. A 6 out of 10. Next, platinum. Looks like a new high close potential. Almost at new highs for a little over a month and a half. Couple of buy signals around or close to the bottoms work great. Platinum doesn't match silver and gold. Platinum is a little friendly all by itself. So I got to go with up in platinum. I know it looked bad at some point, or it looked not so good on Thursday's low, but it recovered great. Didn't do anything of consequence on Friday, and now we're gaining more ground again with a profound possible new high closing price for a month and a half, and maybe also a new high. So I've got to be looking for probably 1032, 1053, and the resistance layer zone 1067 up to about 1090 on strength coming up now. Copper, minor new low, didn't stay down there, turned around at a level of minor support. Yeah, it's not too bad. You look over here, you've got some bunch of highs in that same time frame. Price range, I meant, price range. Important high right there, same price range approximately. Some lows at the same price range. And then you've got some messing around pretty close. I got to be kind of neutral, favoring a little bit of strength here. But we're kind of getting caught between a rock and a hard spot. Pass. Soybeans, oil, meal, corn, wheat. Boy, I'm concerned that soybeans are going to go the way that meal and wheat and oil failed. Corn's not doing good. All of the grain charts a few weeks ago looked pretty good. And all of a sudden, we don't have follow through. We have a false breakout in soybean oil. Things are making new lows. Not beans yet, but you know, it needs some company. It needs some friends to help it stay here and go higher, I think. So I'm afraid beans might break down. Otherwise, I'm going to have to pass on a comment here. Below, on a closing basis in particular, 1034, bearish. If we can get back up above 1084, I'll say, 83, then we're back in business with this bottom formation in the longer term picture. But I'm a bit concerned that the longer term picture is in jeopardy. Soybean oil did break out last week above the neckline. did stay on Thursday or Wednesday of last week above the neckline 100%, but got overbought. Not unusual on a breakout. But Thursday of last week, it completely failed. Not just getting below the neckline and closing below the neckline, but a huge amount. That pretty much kills this head and shoulder bottom that I'm now going to have to erase the markings for. And it was a possible double shoulder pattern gone. Now, the neckline is a resistance line. I think I'll keep that line because it's important. But I don't have an objective that works the same way. Cancel that. Support resistance does not change because of this. We have a little support at lower levels. We have a trend that's got new highs for quite a long time period, but got overbought. The head and shoulders no more. We have a bull trend line across the bottoms that looks pretty good. Yeah, I like the bull trend line. I'm going to definitely keep that. But I'm sorry to say the head and shoulders gone. I think the market's going to hold here. It tried to so far and start to work its way up. But boy, I don't see it happening in soybean meal. Almost a new low for a long, long time period. New lows since early April and super close to new lows for a long, long time period. Not oversold. It's got downside elbow room. It may very well hit new lows of the trend. I don't see any reversals. I don't see any condition except for a potential double bottom, but there's no reversal, no rally, nothing showing me that that's starting, but you have to watch out for it. Otherwise, down. Corn. Damn. Support didn't hold last week. New low closes for months. We had a bottom formation that was developing. I've already eliminated the shoulder low. Back here, this buy signal was a shoulder, but not anymore, not in my opinion. February 26 of 24. This head and shoulder bottom, which did work great, but it was a medium size July, August, September, October pattern last fall, summer and fall. That's ancient history, and it worked. Should have gotten up to here. It did. So it's not anymore the head on a bigger head and shoulder bottom that I have now eliminated the markings for. I think we're going to test the support area again, and I think the bottom of the market is in jeopardy. I'll just bring this little line over to the right. It just is a demarcation of the previous lowest low, a minor support level. And what about wheat? It already did everything I thought. It made lower lows. It did get oversold. It's bouncing a little bit. And the rally isn't even up to a resistance area so far. I don't know. I can't come up with anything intermediate to longer term bullish on wheat. Just maybe a little bit more of a bounce, hitting resistance, and then probably new lows. And cattle. Well, we got a sell signal on the high day last week. Perfect. Dropped off on Thursday sharply from Wednesday's signal. Doji sideways on Friday. Just a little bit more strength today, not doing any damage to the sell signal last week. I'm looking for a move down to 202 and probably a better support level, a little under 200. So I'm going to say a little under 200, and then we'll see what happens next. This should be not where it is. That's what that should be. For some reason, it moved. Okay. So looking for somewhat new lows on cattle. Now, hogs are at a little resistance, but doing okay, except that now they've just turned down to slightly lower on the day. Almost overbought, not quite. Got a lot of problems in the area that it stopped at today again. I think it could slip off a little bit back down to 101. And maybe we'll see how it holds at the support area. So I'm very modestly looking for a little bit more of a dip. this week. Nothing major. 4 stocks. Shell dipping down, not recovering yet. And I've just noticed the E-mini is now up 1 point and a hair on the day. I do believe we now have an outside trading range up in the Spider and the NASDAQ QQQ and the NASDAQ Futures NQ and in the E-mini, which now all are overbought and have an outside trading range. And if they close lower than yesterday's close, Friday's close will have a bearish engulfing ER red sell signal, maybe a very profound one. So let's see when I'm finished here in a few minutes what they're doing. I just looked at my other charts on another screen. So Shell maybe come down a little bit more. Interesting, Apple is spending 100% of today below the neckline. This is a failure at this point of the head and shoulder bottom formation. You're not supposed to go below the neckline. I warned you about this gap getting filled and doing damage to the pattern, which it just did today. We seem to be stuck right at the neckline. I realized I saw this a couple hours ago, and it was right about the same exact prices. So if it closes back up above the neckline, I'll forgive it. So the head and shoulders back in fashion, progress. But if it closes below the neckline, I'm sorry, that's the golden rule. You're not supposed to get there in the first place. And if it stays there and closes below the neckline, then this pattern is probably going to fail completely. And today will be the first day of its failure. I would expect the gap to finish getting closed. Half of it was closed, almost half of it this morning. If it closed 100% of the gap, turned around and got back to where it is now, then I'd say something a little bit different. No reason for it to go down anymore, meaning the gap. And it would have recovered pretty damn nicely, but that's not true. There's still gap to close. So I'm concerned about today's close being below the neckline and killing the formation. Let's go to Tesla. A little bit of a dip, got overbought. No surprises coming down some. Nothing substantial. It's got 1 gap to close, 2 gaps to close, and actually 3. But the lowest one down here at 243 is quite iffy. I'm not sure that's going to get closed. This one's just a little bit below support at 278. It's well within reach. And I kind of do expect this one at 309-ish to get closed. And we're going back to Carvana stock. Today we are now overbought, and we do have an outside trading range, but it is slightly higher than the close of Friday. All it has to do, like the other stock indexes, is close lower than Friday's close, and it will have an official ER sell signal red. There's a gap to close down here, which is what I fully would expect one way or the other. That's about the best I can say. I'm looking for maybe a lower close and a red sell signal to show you tomorrow. It's not there at the moment. It's got to get down $2.70 or more in order to get lower on it by a penny or more than Friday's close. And back to E-mini. Outside up day, overbought conditions slightly higher, not even a point. So easy to get below the previous close. Outside up day, same story on the SPY. Outside up day, overbought, same story on the QQQ. Watch out, guys. Same story on the NQ. Outside up day, overbought. Wow, very, very close here. Outside up, not quite outside day on the YM. It needs to make a lower low than Friday. A lower low than today's low will do the trick. So it's got to go all the way back down to today's lows and make a new low. A lower close would be a little bit bearish, but I'm not giving it a sell signal. It's not going to turn red just because of that. It's got to have the lower low also. And here's the 1 minute. Russell, not quite higher than Friday, so That's what it's lacking. And then, of course, after that, the lower close. And that's about it. You guys have a great day and profitable trading to you.